in the developing world. And to underline that fact, it's now being reported that a state-owned oil company from India is rumored to be ready to take over a Canadian oil company with assets in the oil sands. And shares in two possible targets were up yesterday after a report appeared in India's Economic Times newspaper describing the Indian interest in Canadian oil sands development. And the Indians aren't alone. Dutch, Chinese, Korean, and Norwegian companies have all been increasing their stake in the Canadian oil sector. So, should Canadians be concerned about a possible sell-off of their petroleum resources to foreign interests? Well, joining me now from Edmonton to discuss this is Michael Percy. He is the Dean of the School of Business at the University of Alberta. Michael Percy, I hope you can hear me. I see they're adjusting your...
Yes, I can.
Good, good. Well, I can see they were working on it there. So welcome to our broadcast. Thank you for coming to talk to us. Overall, it seems to me there's a number of different kinds of potential foreign investment into the oil sands. Some of it probably a concern, but others that wouldn't be. Is that fair, or is all foreign investment?
I think that's fair to say. We've sovereign wealth funds, Dubai, for example. There's Total. I mean, there's a number of companies, foreign companies, that are looking at investing in the oil sands, and it's not surprising. You've got 300 years of reserves. It's second only to Saudi Arabia. Stable political regime. No exploration risk. The technology is well known. There's uncertainties related to carbon capture and storage, the price of carbon, environmental issues. But by and large, relative to the type of uncertainty you see in Nigeria or Africa or Venezuela or the Middle East for that matter, the oil sands of Alberta are a really good play.
But when the Prime Minister says, and others have agreed with him, Canada is going to be an energy superpower, if in fact we end up with a lot of our oil sands, particularly owned by sovereign wealth funds or by companies like the one from India that is apparently interested in an oil sands play, is it really Canada that becomes the energy superpower, or is it these other companies that are buying in?
Well, I mean, the reality is we own the resource. I mean, the Crown is the owner. We have a royalty regime that ensures we capture an appropriate share of the economic rents. We have an array of regulatory requirements on the environmental side. So in terms of protecting our interests, our economic interests, I think there's no issue. I mean, we set the rules, we own the resource, they play by our rules. Where some of the concerns arise are on issues then of more than compliance, notions of social license, for example, investment in community and the like. And I think increasingly as companies are aware that their progress through a regulatory process is probably faster if they have a good corporate reputation. They're known for believing in triple bottom line exercises. I think we'll see even that issue of investment in community and being good corporate citizens within the region and within the country. That'll look after itself. So I don't worry too much. I mean, we've got tax policy in place, we have environmental policy in place. I think we can protect our interests. Okay. It's on this other side.
Yeah, go ahead.
Related to investment involvement in the community, for example, where likely there are some companies may be less willing to come to the game than others.
Okay, but what about the issue, and we first saw it, and it wasn't with oil, it was when Minmetals of China, a government-owned company, wanted to buy Falconbridge, and there was concern that really they wanted to buy Falconbridge, and it made perfect sense if you're Chinese, to sell the output right back or to move it back into China for their own development. But in fact, they could be selling it to themselves at concessionary prices, giving it away for free, that it distorted the market, and it also took out of play in a competitive way some of the resources being produced in Canada. And I'm wondering if you're not concerned that could happen in the oil sands as well, either with Chinese or Indian or other companies.
Well, certainly if you look at manufacturing in Canada, it's heavily foreign-owned, and we haven't seen that type of behavior. And as well, I mean, at the end of the day, if a foreign company were to buy it and then to take it back to its own, the country of origin, and distribute it less than price, I mean, we've still collected, we've sold it at the appropriate price. We've ensured our environmental rules are in play. We've captured whatever taxes are required. And if they want to engage in social policy in their own country with resources, that's an issue for them. And most countries, I mean, China subsidizes gas, India subsidizes gas. And so, I mean, since Alberta still, although it's a large player in terms of reserves, it's in terms of the flow of oil, it's a small player, so it's not going to see distortion of the markets. I mean, what concerns me, I mean, in the middle case, state-owned, I mean, if the fear is that a state-owned entity would basically undertake practices that would not be in the best interests of Canada. And that might be particularly true if it's a strategic asset. But at this time, given that we're allowing commercial rules to drive the energy market, that doesn't concern me.
Very interesting. Michael Percy, thanks for your thoughts on this. Appreciate it very much.
Thank you.
Well, of course, as Michael was pointing out, and as I guess we all know, the reason the oil sands are so attractive is because of the record oil prices. And that's just one of the things that's making such a record-breaking week for the Canadian economy. Watching the latest numbers from his desk in Toronto, the host of CBC News Business, my colleague Fred Langan. Hi, Fred.
Hi, Don.
So I guess if you own oil stocks, was it a good day overall for the market or just for oil stocks?
No, it was not a good day for oil stocks. Oil stocks were, in fact, off overall about 1.5%, and some big oil companies were down sharply. That's because although oil was up over $4 a barrel, the market, a lot of market players just don't believe that the price is going to stay there.
That's very interesting because by and large the stock prices have followed the world price up, and in fact, as you well know, today before the U.S. Senate, the oil company executives in the United States were getting a real grilling. But so what is going to happen? I mean, does it take a few days of this higher price before the stocks respond, or what do you think will happen next?
Well, there's a couple of things going on. Your last guest was talking about subsidies, okay? That's subsidies in countries, Indonesia, China, Saudi Arabia, Venezuela. Cheap oil is driving up the demand. Also, you have the growth in these countries. It's also pulling up demand. But we have a guest on our program tonight who says that oil could fall to $60, or that there's $60 in sort of speculation and subsidies from foreign in developing countries to keep gasoline prices down. So that a lot of people in the market are obviously thinking today that the price of oil could fall, and But of course, then you've got smart money like T. Boone Pickens, Jeff Rubin at CIBC, Goldman Sachs. They think oil's going to $150 or $200.
I saw T. Boone Pickens said that. Yeah. So the market will be in flux, I guess, will it? As people have this argument with their money in the market.
And when the market is in flux, it's sometimes a sign that there's a bubble. And for instance, no one knew why technology stocks were rising so fast in 1999, 2000. No one could explain it. Well, there's so many explanations for the price of oil at the moment. It also gives you the feeling that maybe there's a bit of a bubble here. And if that bubble gets pricked, well, all of a sudden we see oil back down to $90 or wherever.
Boy, and then $90 will seem like the good old days, won't it? And happy times are here again.
Still,
but really, the impact on the Canadian economy, both in the West and in the East, will be quite dramatically different if it's $150 a barrel or $90 a barrel.
Well, the impact on the economy is already being felt. You can see that tourism is down. People don't want to drive to Canada. That's, of course, also the dollar. Manufacturing, it's more expensive to manufacture things. We see stories on our newscasts about fishermen who are hard-pressed to go out. Of course, these things are having an effect on and this, of course, should, in economic terms, mean that people will consume less. If the price goes up, they say, well, I'm going to consume less, and then that, in fact, drags the price down. People are also putting that into the equation.
Very interesting. We'll look for you with your program. I'm just checking here. An hour and 20 minutes from now, Fred Langan will be here with CBC News Business. Look for him then. Thanks, Fred.
Thanks a lot, Don.
Now, coming up, U.S. Senator Ted Kennedy is released from hospital But up next, Ottawa moves quickly to remove a controversial oil sands project. To approve, pardon me, not remove it, they're going to get it going. Watch this when we come back.